Hi, welcome to Price Action FX. This is a Forex trading course specially made for all the beginners out there. Are you looking for extra income in Forex trading? And you think that Forex trading is a very difficult skill to learn, and probably there's a lot of Forex trading courses out there and it will cost you a lot of money. But you are in the right place today. In this Forex trading, it's all specially made for all the beginners. So in this course, you'll learn the terminology about all the Forex trading, and in this course, I will include 2 trading strategy where you can use it immediately to trade, and this strategy will definitely earn you some extra income monthly. So let's not waste some time and we go straight into the course. So in this course, the first that I wanted to tell is Forex trading. So what is Forex? So Forex is a foreign exchange in global marketplace where currencies of every country are traded. So, and it is the largest and most liquidity financial market in the world, and it is operating 24 hours a day and 5 days a week. So bear in mind, weekend, Saturday and Sunday, the market will be closed. So what I say 24 hours, so no matter which country are you from, so every different country, because of the time difference, so you can actually trade Forex exchange different country with a different time. So it is run the total of 24 hours a day. So in Forex trading, we know that in this world there are so many countries. If I'm not mistaken, it's about maybe 200 countries in the world, I'm not sure. But in Forex trading, we are only focused in 8 main countries. So in the slides, this is the 8 country currency that we are focusing on. So the first one is definitely the American dollar, USD, and we have UK pound sterling stands at GBP, the euro dollar, EUR, we have Swiss, we have Canada, Australia, New Zealand and Japan. So just remember the code, I mean the short form for each of the currency. USD, GBP, EUR, CHF. So memorize it. So with these 8 main currencies, okay, we need a country currency to compare with another country's currency, make it a pair so that we will have the fluctuation in the chart. So these are the 7 main currency pairs. So from the 8 main country, so every other country pair with the USD is this 7 main currency pair. So we have the pound sterling pair with the USD, we call it a GBP USD. So other than that, EUR USD, AUD USD, so all these, the remaining 7 countries pair with USD, so we call it the main. And besides the 7 mains, over here we have another 19 pairs which we call it a cross currency pair. So from the 8 country, besides the USD, the other 7 country, they pairing with each other. So make it this 19 pair. So 19 plus the 7 main pairs, we have actually total of 26 pairs that we can trade in the market. Why only these 8 main currency pairs? It's because the bank in the whole world, the investor, the capital company, everyone are focusing on these 8 main countries. So it has volume. So when it has volume, so when we trade, yeah, there's a lot of opportunity for you to earn extra income from here. So let's look at next, pips and point. So in our daily life, for weight, we use gram and kilograms. So for liquid we use milliliter or liter, but in Forex trading, we use the unit of pips and point. So 1 pip is equivalent to 10 points. So points is the one that we earn, and our profit depends on how much point that we earn from each trade. So how do you see about the point? So on the left hand side, as you all can see, there is a few pairs on the left hand side. So let's make it an example by USD and CHF. So 0.89108 is the price. So meaning that it's 1 USD, it's equivalent to 0.89 CHF, the Swiss dollar. Okay, so as a point, easy. Use the last 3 digits. That's the point. So another example, let's say for USD pairing with the JPY, the Japanese yen. So $1 USD is equivalent to 154.597 yen. So take the last 3 digits, 597 is the point, and if you to convert it into a pips, so it will be 59.7 pips. So how do we calculate our profit in each trade? So simple formula, the amount of lot size that you trade in times the total point you earn, and that is your profit. So let's see the first example on the left. So this is the GBP paired with the US dollar. So assuming if you are entering your trade at a lot size of 0.1 and you do a buy. When I say you trade buy, so meaning that you are entering a trade for the price to go up. So, and assuming the trade closed at 1.28964, from the place you enter your buy is 1.28464. So now the difference between your buy and the price that you close your trade, so that is the point that you earn. So over here, the point that you earn is actually 500 points. So how do you get the 500 points? By the last 3 digits, your trade closed at 28964. You take the last 3 digits, 964, minus, less the price that you trade in your buy. So it's 28464. By 964 minus 464, then there where you get your profit earned at 500 points. So with the lot size 0.1 and you are earning 500 points, so that means your profit will be 50 US dollar. Let's look at the next example on the right. So this is US dollar paired with the Japanese yen. So same, your lot size is 0.1. Now this time you trade sell at 154.597. So it's a sell trade. You wanted the price to goes down. So the moment the price goes down and you close your trade at 154.097, so meaning that you earn a 500 points here as well. So how do you get these 500 points? Same. Get the last 3 digits, minus it, 597 minus 97, so 500 points is your earning. So by the lot size of 0.1, so times 500, same, exactly, you are earning 50 USD over here. So this is how you calculate your profit. So next one, let's look at leverage and margin. So what is leverage? So it is a sort of convenience provided by all trading platform. You see, when we trade Forex, we need to trade under a broker platform. There's a lot of broker in the market, so you can actually search in the Google and find out. Use a certified broker, Okay, I know there's a broker so much out there. We want to choose an experienced a broker that is already operate for many years with experience and a good payout. So this is how you choose. And of course, when you go along the course, there's one video that I will teach you how you can choose the right brokers. So leverage. So this allows traders to use your capital more efficiently by controlling larger position with a lesser money. So why we say that? So if we are on a leverage 1-to-1, meaning that to buy in a 100,000 unit of USD, without a leverage, you need a minimum deposit of 100,000. Okay, but with the leverage provided by most of the brokers, they are 1-to-100, 1-to-500, and there's also 1-to-1000. Just as an example, if let's say you are using a leverage of 1-to-1000, meaning that same, you can also trade the total amount of 100,000 units of USD, but with just only $100. So this leverage conveniencing are provided by the brokers so that you can also trade in Forex market with the minimal deposit. So that means now everybody can trade in Forex, and thanks to all these trading platforms. And what about margin? Margin is the amount of money required to open and maintain the leverage position. So it is essentially a deposit that acts as a guarantee for a leverage position. So meaning that with the leverage 1-to-1000, you can open a trading account with just a minimum of 100 USD, and you can start trade with 100 US dollar. Okay, so now let's look at the next. Stop loss and take profit. So in short form, we call it a stop loss is in SL and take profit as a TP. So what is stop loss? So stop loss is an order. So every time when you enter a trade, you must set up a stop loss, an order to predefine the price level at which your trade position will automatically be closed to a limit of losses. So meaning that if you do a buy trade today, look at the example on your left. If you take a buy today, so you set your stop loss below the traded price, the price where you enter your trade. So by hoping the price to be gone up, but it comes on the other way around, it drops. So when it drops to a certain level, and the system will cut and close your trade. So that is to limit your loss so that you still have balance in your account, whereby you can anytime recover it back with the money balance in your account, instead of you have $100 in your account and you lost everything in just one trade. Okay, so what about take profit? It seems like a stop loss. It's an order predefined on a price level, whereby if you do a trade on a sell, so when the price goes down as favor to you and up to some certain level, this order will be activated and the system will close your trade, and automatically your profit is reached, and the profit will be automatically transferred back into your trading account. So why we must do that? To minimize our loss and also take our profit when it reaches our expectation. Don't be greedy. Alright, so thanks for watching at this video, and right away click on the next video and I'll teach you the next subject.